The Czech National Bank finds itself in uncharted territory after cutting the benchmark interest rate 3 times last year to 0.05% as the $196 billion economy fell into the longest recession on record. Joining me down the line to discuss what lies in store for the Czech economy and its currency is Jiri Skop. Now, Jiri, while some indicators are showing signs that the Czech economy is starting to bottom out, the qualitative picture hasn't changed much since the central bank's last policy meeting in June. That's according to the central bank leader. He also said a lot of anti-inflationary risks seem to be materialising. Is this a sentiment that you would agree with?
What I see in the data is that Czech economy is really bottoming out. If you look on the sentiment indicators which have been released today, they have been already bottoming around April, so in the springtime, and most of them are increased more significantly, like in industry or in construction, somewhere increased lower. But the main story is that the Czech economy is bottoming out, and what we see is that GDP should grow already in the second quarter, and it will be the end of the recession in the Czech economy.
Consumers' confidence fell 1.5 points in July as they remain afraid of a decrease in the overall economic situation, with worries about their own financial standing. Yet, on a year-on-year basis, consumer sentiments are actually up 8.0 points. Which figures should investors really be paying attention to here?
Yeah, we are looking on the consumer confidence with very much attention because consumers were saving last year. There was a decrease in real income and in real wealth, and they have been saving. So the decrease in consumption was quite huge. It was almost 3% year on year, and the story for central bank was that there will be no inflation and the core inflationary pressures will be very low. And if you look on core inflation, it was in negative territory. So it was big concern for central bank and also for us. But since the middle of the last year, the consumer confidence improved. Mm-hmm. And now we saw it also in the real data that consumers started to spend more at the beginning of this year, and this for sure very good message for the Czech economy.
The Czech currency is at the centre of policy discussions, as without any room to cut borrowing costs, the next tool policymakers may use for easing is weakening the Kurona. The central bank's next policy meeting is on August 1st. Now, taking into consideration the usual holiday lull we experience, are you expecting anything from the summer meeting, and what is your outlook for the Kurona moving forward?
Yeah, the central bankers are meeting at the beginning of August, and it will be, it's hard to say because it's summer meeting, but for sure they will not do nothing about the interest rates. They will for sure discuss the exchange rate if this week, and we have several comments during this week that some central bankers wanted the Czech crown on weaker levels. So the discussion will be mostly about the new forecast and about the Czech crown, possible Czech crown interventions. But we don't think that they are currently on the table because the Czech National Bank will step into the market only in case there will be a risk of deflation. But it's not currently the situation in the Czech economy. Yes, inflation is falling, but it's still in a positive territory. What will go up slightly in a 1 year horizon. Okay. So we don't think that there will be that central bank will step in the market. What they will do, they will keep the verbal interventions. We think that it will be slightly above 26.
Well, thanks very much to Jiri for his time and perspective. Viewers, please do click back to the Dukascopy website for another exclusive interview with my colleague Natalie MacDonald, focusing on Australian inflation. Goodbye for now.